What the?
No, he's right up there, and in the morning he just wants to fucking jump on you.
Y'all can hear me, right?
Yeah.
Yeah.
Yes, sir.
Let's see. All right, so y'all all ready?
Yep.
Let's see. Everybody's in here. Everybody's in here. All right. Share the screen. All right. Make sure everything out the way. I don't know why it's doing that. Hold on real quick. All right, let's start right now. Let me see. Let me delete this chart because this was for the signals. Yeah, I don't know if anybody else is trading. We've been acting weird. Like everything's been acting weird lately. All right, so type 1 if you happen to be here. First things first. All right. So this, what I'm going to give you guys, the way that's going to be structured is everything that I start basically from beginning to end. So the only thing that you're possibly ever going to use from the mentorship, would the regular one, would be, I told everybody to get on, it's their fault if they're not on. Basically, the only thing would be the sessions. So just to break everything down, you can come over here and use, actually, you don't need to use that tool. You can just use this. My main focus is just to divide up the sessions. I'm not going to do the highs, the lows, or anything within the nature. Let's go to the 1 hour so it can be faster. There we go. So then I'll probably mark out the, probably like just Tokyo and then London, and then I'll probably do another one, like just 3 basically to round it all up. So the reason why I'm doing this is because every session is always going to do its own thing. Everything's going to always do its own thing. So if we're just drawing, let me go ahead and draw with this highlighter tool. And if we can see right here, at the beginning of beginning of London just went in an uptrend. So I'm not looking for, oh shoot, hold on, I forgot to do New York. Where's New York? There we go, 1400. So with this one, the reason why I say true opening is because whenever the market opens, like New York, the original time is 1300. The actual true time to where a lot of liquidity is flowing through the market is at 1400. That's just the true opening of it. That's when everything starts, all the transactions start going and everything like that. So my main focus is, once I see London trending up, let me just go ahead and delete that real quick. Once I see London trending up, that's going to be my first bet. So then after New York, after London, once New York comes around, I'm not looking for New York to take out London right away. Just not right away. Sometimes we'll make the pullback, and maybe like around like 1600 when London closes their banks. A lot of the time 1600 will be the pure reversal within that case, but as of right now, you just want to make sure you always keep track of your sessions. Don't worry about the highs, the low, just keep track of the session, because once you keep track of this, like right now, let me go something like this. Let me bar replay right here. Here we go. So just to make everything simple, and I like to strictly do this on a 15-minute, just to make everything simple, if we're looking at the market right now, we can clearly see that we're already clearing out highs, just regular normal structure. So once we're already clearing out highs, more likely beginning New York is going to have to, create some type of pullback and then possibly go up. We're going to have our POIs such as areas like this. And I'm going to actually tell you guys later on. I think it's like the third Zoom on why higher lows is you don't want to trade off of them, honestly. But you're going to have your POIs like this. You're going to have your POIs like this. You're going to have your POIs that can even look like, honestly, hitting order blocks sometimes, still be hitting sometimes, but not all the times. But the whole purpose of a POI, not all POIs will be aligned right. So that's the point of the sessions, because if you're going into the session and the market comes down, at that time that I'm gonna give you guys on this Zoom, at those times, those are the times that you're supposed to be entering. So like a lot of the times, like I'm pretty sure people with the chart with Deshay, whenever I give like a entry point, sometimes it won't even go up to it, but the direction will still be right. It's because at that time I'm looking for the market to roll over at that time. And once you guys understand that, you guys are going to be like, oh, okay, now this is making sense on, why it would happen. So you guys get it on why I say keep track of the sessions, right? Don't have to worry about the highs, the lows, just keep track of the session, because each session is going to do its own movement. Each session will do its own movement. Unless it's Tokyo. Tokyo can sometimes consolidate back and forth, and y'all going to understand why that happens. But each session will do its own thing. If London trends up, probably New York will make like a higher low and then continue to go up. Or sometimes it can even make that lower high in New York, and then once it makes that lower high in New York, more likely that's when it's going to take out the whole entire section that London did. But type of one, if you kind of get what I mean by keeping track of the sessions. Yeah, exactly. It's just like a confluence within itself. That's my first start. First start, I always keep track of the sessions, no matter what. Always keep track of it. Do you guys have any questions on that one? You guys are all good. If you guys have any questions, you can unmute yourself real quick for questions. If you I prefer you guys to do that instead of type it. Rollover is not on this one. You jumping the gun. Rollover is going to be in the future ones. How can that info be used? So the info that's going to be used is, like I said, like let's just say right here, London starts off going into a buy. So now when London starts off going into a buy, are three times that I'm going to give you. You guys can also write these down too. Let me delete these highlighter tools. Actually, you know what? No, because I want you guys to see this. All right, times to enter the markets. Let's see. Let's see, for London. It's going to be around 9:30. Sometimes it can even happen at 9, but yeah, no, I'm just going to give you the guys. Just I don't want you guys doing too much. 9:30, 11:30. And what was the next one? And that's it. Yeah, that's it. Sometimes the market will go up around like 8:15, but I don't really like to trade the beginnings of the opening, because let's just say that at 8:15 the market goes up. the market can go up, but it can also do a heavy reversal. But as you guys can see, where's the time at 8:30? I'm not 8:30, 11:30 right here. So 11:30 right by our POI is where we're going to be taking this entry at. So I know for sure when it gives me that entry point that I know for sure that my trade is going to continue to go up. Yeah, you can enter at 8:15, but it's not always promising, honestly, because those normally can easily be reversed. For New York, for New York, it's going to be 13:30. 14:30. 1600s. And 1900s. 1900 is when I like to close trades. 1900 on the dot, you should be able to see an instant push. If you don't see an instant push at 1900, I'm closing. So 1900s, if you don't see a push, see push on the dot. And honestly, I recommend all you guys to take it session by session, honestly. So I want you guys to screenshot that just in this box right here. You don't have to, actually, I'll make it bigger if you want to do it like that. Type one of your EP guys already got that down. Yeah, everything's always
Is
gonna
that
be
for
on
the
UTC.
UTC time frame?
Yeah, everything's gonna be on UTC. I'm gonna also talk to you about that too right now. UTC London, always. But once the time, because it gives like the market needs a week, like when the what is that? What is that? When the time changes, daylight savings, it always takes a week. So once daylight savings hit, just make sure you go to Amsterdam, and it's going to be the same as UTC London. So when time goes back to when time gets back in sync, you can go back to UTC London. Because I know earlier, I think October, whatever, everybody was getting confused. You just got to make sure you go to UTC Amsterdam. That's the trick right there. So yeah, this is all done on UTC London. Do you guys have any questions about that? You guys already got the times down? What time would you recommend for a Tokyo entry? Oh, no. Yeah, I'm so happy you said that. I'm so happy you said that. This one is time to enter the market. Frankfurt. Frankfurt definitely 07 to 015. Actually 07 to 030, honestly, just to be more realistic. 730. And just drop this down. Now Tokyo gives some good entries at 04, but I never take them honestly because sometimes it can be sketchy. 06. 06 up to 07. We're just gonna do 07. 07. Frankfurt open. Frankfurt open. All right, so make sure you guys write that down. Now, daylight savings, like the first week, okay, I forgot what day daylight savings is, but like let's just say that daylight savings starts today. Instead of putting it on UTC London, you'll be putting it on UTC Amsterdam. And then because instead, like spring is spring ahead. So London wouldn't be at 02 Central Standard Time. It'll be at 03. So for that whole entire week, you want to put on Instagram, not Instagram, Amsterdam. So then after that week gets synced right back to where London is at 2 Central Standard Time AM, then you can go back to UTC London. So it's just for that whole entire week because it needs to take a week for the markets to get in sync with the time. So just for that whole week, you just want to put it on UTC Amsterdam so you don't get confused. So you guys got everything down? Type of one if you guys got anything down, or unmute yourself if you guys have any questions about that. Okay. Okay. Seems like the timing cycle. I wouldn't call it a cycle. So really using London as of right now. Yeah, you're always going to be using London. The only time you're going to be using UTC Amsterdam is once daylight saving hits for that whole entire week. And then after that week, put it back to UTC London. When does Frankfurt open and close? Frankfurt opens at 07 UTC and it closes right when London opens up. And just for that week only. Yep, and just for that week only. Okay. So now the time frames that we can use with this one, yeah, the time frames that we can use for this one. Let me exit this out. Let me see if this is my question. Yeah, it's UTC 07. No, 1500 that's New York. Frankfurt opening is only at 7 and it ends at the beginning of London. So 07 to 08. 1300 is the actual true open of, I mean, not the actual true open. 1300 is the actual open of New York. The true open in New York is 1400. So if we look at these areas, let's just wait for a time. So this one, 1400, 1414, 1430. So if you guys can see, there we go. That's what I'm looking for. So now if we can see this 1445. So normally, whenever areas are like this, you always want to look to the left. So just like in the previous mentorship, like with the session highs and session lows, yeah, you can max it off and everything like that. Just, you just want to see how that area rolls off of, because as of right now, the times that I've given you, the market has yet to even, make any hardcore moves. So when the market doesn't make any hardcore moves at the times that I've given you on the dot, sometimes it could be like 15 minutes late, honestly, but majority of the time it's always going to happen on the dot. So now, since I'm looking at this, the market really didn't move yet. So now, keep in mind with these times that I've given you right here, where's Frankfurt? Yeah, there we go. So now this is 1445. So now this is 1500. 1500 can sometimes set up reversals. But like I said, I like to do 1600 because that's going to for sure get me in to the trades. So that's 1530. That's 1545. And that's 1600. And you see how the market didn't even decide to go up just yet. Now, if you look at this right here, a lot of traders, a lot of resistance is being built up in this area. So we're not even going to smaller time frame just yet. We're just going to stay on the 15 minutes just to show you guys how powerful one time frame is. So if you're looking at this area right here, where it's 1600, 1600, 1600, 1600 right here. So if we're looking at 1600 right here on this candle, just right there, that bearish candle. So if we're looking at this candle, let me go back to a bar replay right here. Do you want to exit bar replay mode? No, I don't know why my thing is tripping. Okay, there we go. So if you look at it right here, and this is where the whole smart money thing comes into non-existent. So a lot of the times, what people will do, let me let in. No. So a lot of times, what people will do, regular smart money people, they'll see that it prints it past it, and then now she's trying to break structure or whatever. If you really look at this, let me delete everything. Let's go ahead and put that time back on there, 1400. If you really look at everything, a lot of the smart money people will start to maybe sell right here, because they're going to look at it as like some voice, some order block or whatever. And then they're probably going to short right here and put their stop loss right here. If you look at the time, where is 1600? Let's go to 1600 again. 1545. There we go. So if you look at this area, remember what I said. I don't know if you guys are in the charting, but I told you guys in the chart a long time ago, once you have a POI, if that POI fails, like let's just say that if you're looking to sell at this POI and it fails, that POI would just set up for a buy. That whole consolidation part where you got knocked off, it's a lot of transactions going around there and everything like that. So the purpose of these transactions, I'm pretty sure, like once you look at the beginning of these sessions, majority of the time they never take off right away because they have to do some type of consolidation at the beginning of the market. Prime example like this. This is one of my favorite things, even from some of the private students. So let's just say that right here, you have the 1300 candle, and then you have the 1315 candle. So this is the beginning of New York, the actual beginning of New York. So once we have that 1315 candle, what's going to happen is more than likely, since we did a stop right underneath that 1300 candle, what's going to happen is the market is going to stop it out, that beginning opening of the candle. And then once we close right above that candle, but we stop it out, more than likely, that's where our buy is going to start happening. So now we're going to wait for the 1330 candle to happen. And then what I'm going to do, I'm going to place my stop loss right underneath that 15-minute candle, that 1315 candle, and then continue to ride up like that. Because once that first 15-minute candle spikes out more than, and we close above it, more likely that's where we start to see the shift in direction and everything. So now if we're looking at this area right here, this is 1600 right here. So now this is our failed POI. So a lot of the smart money traders, sometimes they even have their stop loss right here, super wide, just above it, saying it's for spreads, knowing down it's not for spreads. But what's going to happen is they're going to try to hurry up and sell that. So now once we go ahead and click this, as you can see, 615, that 615-minute candle, the true opening of the times that I've given you guys, the 1600, as you can see, the 1615 candle came to stop it out. Now, yeah, like the regular, like if you guys are in the boot camp, the regular 0 to 100, it's still valid. Now, the only reason why this is going to be a lot better than the fair values because you need to actually know what's going on in that market. Once we have that 15-minute candle that comes and spikes that area out, that's good, because some people will look for it to be 100% and then buy. No, you have to actually understand what's going on when the market is moving. So when we actually pierce that zero and we start closing above it, that's the telltale story saying that the market is going to, just take a complete shift in direction. So now that's the 615 candle. Sometimes you will get the 30-minute candle that still comes down here and clear everything out and then go up. That's perfectly fine, but more than likely, the 15-minute candle is going to hold up really strong. So then now what happens? And then now the market continues to go up. And this is all just from within this area of smart money's people trying to sell. And if you look at it too, this is the beginning of, of the true opening, because 1400 is the true opening. So now let's just say that right here, if you would have gotten into the markets right here, 1130 is another good time. That's another good time, one of our golden times. So one, we already have our zone, just a regular, just honestly, what these are, whenever you see candles that kind of look like, some people call them a hammer, some people, I hope they don't call them order block, but some people call them a handle, a hammer. What those are, whenever you see like a good wick come up and the body starts to get smaller and smaller with a closure, what they're doing from the footprint, what they're doing, they're just basically compressing orders, not consolidating them, but compressing them. The point of a compression of orders is because they want to get everything all in one, basically candle, because they every pip is damn near basically $1 billion. Every pip is damn near $1 billion. So they have to compress as many orders just all in that one candle that fast. That's why you'll sometimes when the news happens, you'll see the candle just shoot up or spike down instantly, because they have to make sure that that candle is compressing all them transactions at once. So when I say compression all them transactions at once, you got to make sure that how can I put it? I'm gonna put it another way. Let's just say that you're trying to get something into like a Honda Civic. A Honda Civic is small. So in order for you to get everything off, like in order for you to get everything into that car and drive off to your destination, you have to make sure you compress everything in that trunk. So that's literally what the market is doing. They're compressing everything, not necessarily tricking people into selling, but they're just compressing everything so they can start making their next move. They're not closing out orders. They're just compressing them. They're kind of like putting them, they're kind of like dishing them all out, you know, like all over the board. When I say all over the board, sometimes they will leave orders, believe it or not, especially with that's why I hate when people say track the banks. Like right here, let's just say that JP Morgan can actually be holding sales right here and the market will be right here. They're still going to hold them sales. Why? Because it's a lot of manipulation that plays at these higher lows. These higher lows are just compressed money that's in the market. So that's why sometimes you'll see the market come down underneath that higher low and instantly shoot right back up, which is going to be the major amount of liquidity in the other Zooms. So do you guys get what I'm saying so far? If you're not, unmute yourself, or, you know, just type one if you get where I'm going so far. Okay, perfect. Is compression a large amount of orders then? Compression doesn't have to be a large amount of orders. Compression normally happens at the beginning of these sessions. So as you can see right here at 8 o'clock happened right here, and then you get compression. And then most of the time when we get a lot of compression, we'll just come and dip right back into it. That right there is going to be like your actual buying point. That's going to be your current higher low, not a higher low to swing it, but that's going to be your current higher low. In a short amount of time, yeah, in a short amount of time, definitely. All right, so let me go on to this one now. So as you can see, oh wait, somebody else has the question. Are they buying and selling at the same time to compress while it go up first? Yeah, so what they're doing, okay, I'm gonna use JP Morgan as a perfect example because I think JP Morgan is so stupid how they trade. So what they're doing is let's just say they buy, or actually I'm gonna use you guys as an example. Don't even say that you didn't used to do this, because every trader did this, especially me. Sometimes let's just say that you'll get into a sell like right here. You will get into a sell right here, and then you will still be holding your sales going all the way through here. Now, keep in mind, each pip is damn near worth $1 billion. So JP Morgan can be trillions of dollars in drawdown. Now, the reason why the market comes and takes out these lows like to the T, is because literally that is like the how can I put it? That's like the exceed limit of where they had all their orders and stuff like that, which is why major minor liquidity is going to make so much more sense to you guys. And the I think it's like the third Zoom or whatever, because that's why like they set up highs and lows like that on purpose. Because if you look right here, if we look right here, a lot of people will probably be like, okay, we're in a bullish structure. Let's see, this is a higher low. So let's go ahead and, you know, buy from this higher low. So then what's going to happen is, let's go ahead and put our sessions on there. Box sessions is on there, and then 1400s, 1400, there we go. So then if we look at that, after this, let's go to 00. There we go. So then after that, watch this. So if we're looking at this, a lot of people are probably trying to be getting into this trade right here. And then they probably gonna be like, all right, to the moon, to the moon. Sad story. Why is that? If you look at it right here, 1600, I said to get in 1600. So my bad, you guys, I'm just coming off a cold right now. So like right now, a lot of people, when you guys are first starting off, you're probably going to be like, well, 1600 didn't move right away. You know why I didn't move right away? Because you have to let the market do its thing sometimes, because sometimes it could be late. So 1600 at this candle right here, 1600 is where you should be looking to start analyzing the market. So if you look right here, the only thing that you will always need to still remember from smart money that's actually kind of dope still is premium and discount. Premium discount is still going to be valid. So if you're looking right here at 1600, the market isn't really at the best of a selling point. We don't really have anything here, but we do have our 0 to 100 still. We still have our 100. And then we still have our 0 that's right here. So the fair value can still work. It can still work. But a lot of times people fail at it because they don't understand the time. They don't understand keeping track of the sessions and everything like that. So now, let's see, where is it at? So now 1630. Let's say this area right here. Let me do bar replay because I love these trades right here. Let me go ahead and do yes. Wait, where was that at? Where was it at? Dang it, where is it at? Oh, it's right here. Bar replay. Right there, there we go. Okay. So what this part is, whenever you see a good POI reference point, not a reference point, but a good POI, a lot of the time people are going to probably start selling because of resistance. If you guys look at a lot of my trades on Instagram, I'm always getting entries right after people got stopped out. And why is that? It's because this is not a lower high. To have a correct lower high, you're going to need to rebound off of a true POI. It's no true POIs over here. Every lower high, every higher low is going to have to bounce off of a true POI. It's nothing right here. This is literally just a range. So now what my focus would be is to get an entry somewhere in this area, more likely right here on the 0, just to make sure I'm in the trade. Boom. Now this is the true lower high right here. How's the true lower high? Because we actually ran it into a POI. A lower high and a higher low is really meant for the market to print its foot. After print its foot, the market should not come back up there anytime soon. Anytime soon can be in a week. It can even be like, depending on how the market moves, it can even be 3 days, honestly. It can even be a month. But the true lower highs or higher lows are always left from the POIs. POIs is going to be the area is so that one right there, the POIs is going, because I'm going to give you guys probably like 5 to 7 POIs. 2 POIs would be from smart money. They just don't know how to use it like how they should, honestly. I really hate that. But yeah, I'm going to give you guys like 5, 7 POIs. The best ones that I use, I'm gonna break it down to my favorite ones to my least favorite ones, but they're still always gonna work. My favorite ones though is the ones that's gonna for sure always work. Like I can over leverage like crazy. I could throw 100 lots on there and be calm, you know. So at that point, now we can actually go ahead and short this. Another one of my POIs right here, and you guys will understand why I call it the methane candle, because a lot of the time people think it's an order block, supply candle, demand candle. It technically is a supply demand candle, but I'm actually break down to you guys what actually goes on and why the entries, sometimes you would take them on there, sometimes you wouldn't. So now if we go ahead, so now if you looking right here, let's see, 1700. So now we have 1900 coming up, 1900 coming up. If 1900 is floating around in this area, I don't want to go back in this area. I don't want to go back in this area. So now we have 1845, 1900. So it's debatable, honestly. It's debatable. I'll probably still keep it because, like I said, this is the actual POI that we actually made a lower high at. So we just want to see how it reacts. It can still possibly go up because as of right now, the higher low wasn't made at a time that I'm giving you guys. Then the market's done. After that, yeah, the true opening is 0-0. That's why I gave you guys a true opening. True opening is always going to be some of the best entries to take in Tokyo off tops. But just from all in this range, you can even look at this one before, let me see, before 1400 even occurred, you can even just see all within this range that this is what we have to go off of. Don't be that trader. You guys will actually not end up being that trader that goes all the way back to look at what the market is doing. Like, no. The point of price action is to see what the market is doing currently. That's why a lot of the times I will answer the question. They'll be like, do you see such and such going here, such and such going here? I don't answer that because my main focus is for the market to be pure price action. What goes on right here at the time that's giving is what's going to give to the future. Hate to say it, a lot of the myths, when they say history repeats itself, it doesn't always repeat itself because if that's the case, everybody be rich. Looking back in the past will not help you determine the future. The only time it will help you determine the future is if this whole entire range, you need to look at a POI that the market has to rebound off of, which you guys will understand that in the next Zoom right there. So would you just get a second entry at that 1900 pullback? I more certainly would. And I'm gonna tell you, and I'm gonna tell you guys, actually, I'm gonna screenshot this and I'm gonna save it. And I'm gonna tell you why I would on the third Zoom. Because you're gonna be like, what the hell? Do you guys get everything that I said in this one? Type of one, or unmute yourself if you have any questions. If you have any questions, unmute yourself. Okay. Now, for the first one, I did put time frames used. Now, who can remember when I said that the highs and lows will be made Tuesday? Type of one. And then type of two, when I said, sometimes it could even be on Wednesdays, but type of two, if I said reversals happen on Thursdays. All right, so you guys listen. So watch this. This will be the only time you use the 12-hour. Every time the market on the 12-hour comes to a POI, that's how it's gonna let you know when the high or the low can be set. You're not gonna be marking up this time frame. Somebody unmute themselves. I need somebody to actually talk right now. Just one person.
What's up?
All right. So look at this. What time does this say? And what day?
That's a Tuesday at 10.
Now let's see. What time does this say?
Tuesday at 10.
Now let's see. Now let's pick another random spot. Let's go down here. What time does this say?
Wednesday at 10:22. Oh shit! Sorry, did not update. Tuesday at 22.
Now let's see. This is another good POI area right here. What time does this say?
Tuesday at 10.
Okay. Now let's see. Let's get another one. What time does this say?
Thursday at 10.
Reversal, right?
Yeah.
Okay. Now let's see. What time does this say?
Thursday 2100.
I actually took this trade too because if you look, sometimes when you measure these areas, I think I told you guys this in the boot camp. Sometimes we measure these areas of like for where the market wicked out and created a true higher low. Because if you look, it wicked out a POI area, which I'm gonna go over this too later on. But as you can see, just right in that area was a good area that the market came and rallied into. So 12 hours is still going to have you POI. If you look right here, Thursday ran into this area. Now, again, what time does it say?
Thursday at 10.
Okay. Now let's take it all the way back. Let's see, was EU. Let's take it back right here now. All right. Now, what time does this say?
Tuesday 10.
Now, that same methane candle that you guys are going to be understanding about and later on in the Zooms is right here. Price action is the most important thing. So you're going to be going off with the most current, what the most recent candle was. A lot of people, they'll be looking for the market to come up here and it never gets up there. And they always wonder, why did the market not come to my entry point? Because you're not paying attention to the previous candle. The 12-hour just told you when it's going to make the high, the low for the week. If you look at this area right here, what does this say?
10 on Thursday.
Reversal day. Now, if you look at it right here, we have all of these sellers that we have to stop out. That same entire methane candle. Why is this methane candle still relevant? Is because it bounced off of another one. This was a true lower high. This was false. This lower high didn't hit any POI. We want to wait for the body to be intact for it to hit a POI, or at least come deeper into that methane candle. So now, let's just say if you look at this area right here, this was Wednesday, right?
Yeah.
Okay. So if you look right here, this is still Wednesday. Let's find Tuesday. Okay, so Tuesday. So let's just say if you're getting into the trade right now because you feel like it's ready to go. You have that same exact candle that's right here. You have the same exact candle that's right here. So me, I'm not going to take the trade on Tuesday. I'm not. I'm going to wait until Wednesday because it still has more room to go up. It still has more room to go up. If you look at this right here, let me see. There we go. What does this say?
Thursday at 10.
Type of 1, if you guys never thought to do that with the 12-hour. And type of 2, if you guys don't know why that happens, I'll tell you why that happens. Right, somebody had a question. What's the definition of a methane candle? So with me, when I was, because I was on the charts for so long, and it was so many ways that it's so many ways and stuff like that. And it's just like, sometimes they never work. Or sometimes I'm pretty sure like sometimes you'll be like, okay, I'm about to order block, and it just completely destroys your whole entire trade and you get wiped out. The person behind that is because not every move is supposed to happen like that. Normally at that methane candle, if you ever look at anything with like mining or anything like that, like when they say methane pocket, anytime that happens, it's a big explosion that happens, a very huge one. So whenever whenever we get a candle that hits into that methane candle, we should always get a big explosion. If we don't get a big explosion right then and there, it close out the trade. It's going to reverse on you 100% of the times. That's why I don't need to use trading views to trade, because I can actually identify this, because I want to see the market move fast when it hits that methane candle. It needs to move fast. Because if you look at it right here, let's see. Where's a perfect example? It was one actually not too long ago where it hit it, and I knew it wasn't a good one because it didn't roll off, and it actually just decided to. That's why I'm on a 12-hour. I have to find that one. What did you say Wednesday was used? Honestly, Wednesday, to make everything simple for you guys, if Tuesday created that high, this will be Wednesday Tokyo. Because if you get into a sale, and I mean, if you get into a buy and New York did like a massive drop, don't look for buys in Tokyo. Not until Frankfurt is done. Never do that. I used to get wiped around so much like that at the beginning of my trading days. I'm just like, but it's Tokyo. Why didn't the market go up? It's because Tokyo is supposed to make a pullback. And then after we make that pullback, then we have to come, and then Wednesday we'll finish that sell off. And then Tokyo will make like the consolidation. And then Thursday we'll go ahead, bounce off of that, and then do that reversal point. So that's what is always going to happen. I want to say 90% of the time it'll happen, honestly. Yeah, 90% of the time. But now we're going to take it to the Tokyo attraction. And this right here is one of my favorites. You can literally just trade off of this. So I'm pretty sure a lot of people have been trying to catch on to like, why mark off the Tokyo range or, you know, something like that. And they're trying to figure it out, but they can never figure it out. Nobody does it right. I've only seen one person do it right. That's it. So if we look at, pick a random pair, honestly, because I look at EU so much, I already know what's going to happen. So anybody, just pick a random pair. Not Bitcoin, a Forex pair.
AUD USD.
AUD USD. You know, people actually been telling me to trade that. They said it moves good. All right. So now what we're going to do, Tokyo, True Tokyo starts at 07. I mean, not 07. True Tokyo starts at 00. This time, we're going to draw. Actually, let me do it right on here. We're going to start it off at 22 because 22 is Sydney opening. Sydney opening is where that daily candle. That's why I said you don't need to ever check the daily or anything like that. Sydney opening is where that daily candle happens. Now, once that daily candle occurs, it even though it does nothing, that's when a new day of transactions start. So the beginning of something will always hold the most liquidity. It's like a boomerang. The person that throws it, it will always come back to it, just like the target. Whenever it leaves that daily open range, it will come back to it. That's going to be in the methane candle soon. How do I actually identify that? Now to correctly identify, yeah, that one's on that one. Side notes, any specific chart will be using FXCM only. FXCM is the first one to actually move the bank, even though they got caught with a lot of scandalous stuff, but it is. So now what we're gonna do, we're gonna draw out 22. And then we're gonna end this at 06. There we go. So now, if I have any private students in here, you probably already know what's going on. But now, what's going to happen is you're going to have a POI. And I'm telling you POIs before, because once we actually get to the POI zoom, everything's going to like, it's going to be like, yo, what the hell? You're going to have a POI above Tokyo. You're going to have a POI underneath Tokyo. And then you're going to have that same exact setup in two ways. In two ways. You're going to have it right here. You're going to have it right here. There we go. Now I feel like copy pasting the last one. And then you're going to have it right here. So you're going to get two outcomes of it. If you have a range, and then this is your whole range right here, what's going to happen is if Tokyo is trending from like a discount, what's going to happen is after that Tokyo session is done, like a 06, you'll get that same methane candle. You'll get that same methane candle at the discount. You'll get it in the middle of Tokyo. And you can also get it at premium of Tokyo, depending on how fast the market wants to move. But if you get at the beginning of Tokyo, guarantee that first higher low, that last higher low in Tokyo will get swept. So now what's going to happen after Tokyo is done, what's going to happen is you can do two ways. You can go ahead and get that fib and measure that whole Tokyo range with the fib. Only use 705.886. That's going to be the areas that you want to work with. That's still going to be relevant no matter what. So then now after that, what's going to happen is if we don't come down here, we're going to come right here. The timing will let you know when the market's ready to move. So now if we come to like a deeper discount of Tokyo, the market will decide to move and it's at 7. That's when Frankfurt will go ahead, make that actual higher low. And then London at like 8 around this time will make another higher low. And then 9:30 will come right here, right basically almost to where London started. And then it will go ahead and carry. So whenever Tokyo is trending at a premium or at a discount, London will majority of the time finish that move. Now, let's just say that, oh, and after that, sometimes New York, depending on, like, if it's news, that's how I know to extend my target. Because if it's news happening that day, majority of the time, it'll just come out and take out the POI underneath Tokyo. So then now, after that, what's going to happen is, let's just say that Tokyo creates that high and that low. Once it creates that high and that low, no fib. Wait to see what side gets taken out. Because remember, once one side gets taken out, next. One, next. One, next. One, next. So now we will have our POIs to the left somewhere in this area. Once we close Tokyo and we take out Tokyo lows, Frankfurt opening needs to be by this POI 07. And then we can buy from this. My target is going to be from here. I mean, my entry is going to be from here. And let's just say that we have a daily opening right here that never got tapped into. I'm going to run all the way past Tokyo because I know for sure it's going to take up Tokyo. Once the lows of Tokyo is getting taken out, the highs will get taken out. And then that's when it's going to have to go like this. And this is just the first start of understanding what's going to happen in Tokyo. So now, if we go ahead, you guys got everything. Type of 1 if you got that before I delete it. And unmute yourself if you got a question.
Can you just go over that one more time?
The whole thing or which one?
The part that you drew out, like the whole thing, yeah.
I got you. So for this one, whenever you have a whole entire range that's coming down, because Tokyo should consolidate. If Tokyo just trends one way at the discount or premium, London would just continue to go in that direction. So majority of the time, whenever Tokyo is trending up, majority of the time it'll come to the discount of Tokyo, and then London would just continue to move up. Now, once Tokyo consolidates after 06, once that Tokyo low is broken or high, vice versa, in this scenario, once that low is broken at 07, we're going to be looking to see if 07 is by our POI. If 07 is not by our POI and the POI is like down here, then we're going to be looking for 930 to come down here. And then buy from that area. You get me?
Yeah, thank you.
Mm-hmm. So now let me go ahead and delete this now. So let's go ahead and throw it on. Let's go ahead and throw it on. All right. So now, if we look at this area right here, you can see that True Tokyo is so clean. So once we hit that True Tokyo, majority of Tokyo was basically just trending. So now, if we look at this, let's go ahead and measure the fib. Boom, boom. Right in the discount of Tokyo. So not only right in the discount of Tokyo, the 30-minute and the 15-minute, actually, the 15-minute and 5-minute is my favorite. I haven't used 30-minute in a cool minute. So if we look at that, what is right here? We need to take out the higher lows. So we took out a higher low. That's why if you see my highlighter tool is always higher lows that need to be taken out. It's always going to need to be taken out. So if you guys ever see like a highlighter tool like this or something like that, it's because those are lows and highs that, need to be taken out. Yeah, from wick to wick. So then after that, you can go back to the 15-minute because you already know it's a 5-minute higher low that needs to be taken out. technically you can even see right here. So then after that, you can go ahead and ride it up to this high, but let me go ahead and break it down. Let's go ahead and go to the left. Let's go ahead and go to the left. Let's see. Ooh, AU still gonna keep going up. But this daily opening did not get tapped into yet. So I'm gonna screenshot this. I actually want to see what's gonna happen with that when the market opens up. But let me go back in the previous areas. So if you look at this right here, as you can see, Tokyo trended from a premium area. We're at the top. Once Tokyo trended from the premium area, as you can see, London finishes the move. London will always finish the move majority of the time. I only say majority of the times, I have seen it a few times where it kind of did some fishy stuff, but to be truthful all the time. So now if you look at this right here, 07 Frankfurt opening. Frankfurt opening was a good area. Why was it a good area? Watch this. So you see how you have this methane candle. Recognize this methane candle, honestly, you guys. Because I'm gonna throw out a few different ones because they all don't look the same. I gave like 2 to the boot camp, honestly, but it's a few more that you need to identify what they look like. So now let's just say that right now people are trying to buy. But since you guys have this information now, you already know that Tokyo is trending from the premium, not gonna continue to go up more likely. So now this will probably be a failed POI. Failed POI is just turned into another good POI for the opposite position. So beautiful, so beautiful. So if you look at it right here, yeah, we do have another true methane candle that's right here that we wrote off of. So because we already cleared out this area of this POI, I can go ahead and short this area right here because we're still in our methane. We're still in our methane candle that actually failed. So now we can actually go ahead and go right there. Now this is a far target. I don't know what happened, but we do have this. Oh yeah, also too, word of advice, whenever you guys see these single wicks, they will get taken out. The double wicks like this, tweet the tops, whatever you guys call them, sometimes, and they're not really valid, but with this, it's just a large amount of liquidity that left the market. So now this is the actual daily opening. As you guys can see, this is the daily opening. So let's just see if we can actually run this target into here. Boom, just like that. So then now after that, let me go ahead and delete that. Let's see when another Tokyo comes in. All right, so what time is this? What time is this? What time is this? 4, 5, 6. So 5:30, 5:45, 6. So 6. All right, so we're right by our daily target yet again. Do we see any POIs to the downside? No. We don't see any POI like that to the downside. We just see a range. And we can still take it out, but let's just play it by ear now. So now we do have a methane candle that is right by Tokyo, like right in the middle of it. But I want to see it close underneath it. It can spike it. I just want to make sure it closes underneath it. There we go. It literally closed like right on it too, like perfectly. Then again, if you want to go ahead and do that again, all this is just the 50% of Tokyo that was measured out. 50% of Tokyo that was measured out. 50% of Tokyo and 07 I mean, what more confluence do you want? Do you want all them indicators and trend lines and everything, or do you want to just make it the simple way? And I'm just showing you the fib because I don't use the fibs, but until you can use your training wheels with the fibs and everything like that until you guys are able to identify without the fibs and everything like that. So now after that's been taken out, let's just say we got that entry right here. 24, 24. I can hold it still. I can hold it until the next time that is given. So the next time that is given will be 9:30. And you see how the 9:30 was holding up really well. And then we came right back to that daily target. So honestly, I could just ping that back and forth. I can just go ahead and buy from here and then run into this daily opening or whatever I want to do. And let me see, what time is this now after that? We have 11:30 right there. 11:30. And then the market comes up at like 12 to get that entry. Let's see how we're doing. Because as of right now, this higher low really, it's no POI that the higher low bounced off of. So it may not even be a true higher low. See? Because a higher low, it was never a POI in this area for the higher low to even, go off of. But then again, you guys would probably be like, if it was a methane candle here, though. And that's why in the methane candle Zoom, I'm gonna show you when to use it and when not to actually use it. Because everybody thinks that when it comes to POI, you can just use it anytime you see it. No, that's not the case. If you guys have any questions, you guys can unmute yourself while I read this. And it's not my indicator. My boy did this weird coding stuff in here. I got it from him.
When you say, oh wait, now you go first.
I appreciate you, King. I was about to say, could you go over identifying a methane candle one more time?
Yeah, that's going to be in the methane candle Zoom. That's like all dedicated to that one.
That's
yeah.
a bet.
Okay, I don't got no question either.
Okay.
Hey, Abhishek.
Yeah, so y'all gonna know the methane candles. Literally all my entries are done off of those methane candles. More likely the 15-minute or the 1 minute.
Abhishek.
Yeah, go ahead.
So since you're pretty much gonna show it, you're gonna do a whole methane candle Zoom, and you're gonna do a whole POI Zoom as well, right?
Oh, of course.
Yeah, so given that you're gonna do them separately, not today, I guess my question would be like going forward, maybe just after this one, what would you recommend, since we don't necessarily know the ins and outs of the methane and the POI? Well, to be able to use this, like maybe like start using this like this week, what would you recommend to look for, I guess?
That's a good question. So I don't want you guys to look for the methane candle just yet. I want you to understand on how Tokyo moves. Because even though I'm telling you guys on how it's moving and it's going along perfectly, like how I'm predicting it, I still want you guys to get used to it with your own eyes so you can actually understand that. Because if you guys try to do everything all in one the first week, everything will kind of like get cluttered and you'll be like, damn, okay, what's going on? What am I not mixing? I want you to go step by step with this. Because I guarantee you, after like the 1st of February, y'all gonna be, passing prop firms and doing like 10% growths in one day. So yeah, so that's it's really gonna make a difference. But for that to happen, I want you guys to just take it step by step. So for this day, Tokyo is really gonna be the most important. Now type of 1, if you guys want to know why Tokyo does that. Okay. So the purpose of that, what Tokyo does that, if you look at any of these, also, by the way, let me see. Deshaun, I'm gonna get back to your question after this one. I'm gonna get back to your question after this one. So now, if you look at this, every time Tokyo sets that high and that low, and we're going, like we're fading into an uptrend, what's going to happen is we're going to always have to come back to that discount of Tokyo. Now, the reason why it sets the high and the low for the day is because at the beginning of that day, so let's just say like true opening 0-0, because 2022 won't necessarily make the high or low of that day. But if you look at this, we're gonna always need to make a high and low for that whole entire day at least. It can go longer than that and never take out the low for like a whole week. But in this case right here, because we did set the high and that low, once we came to get that consolidation, because Tokyo is going to consolidate all in one, because what's going to happen is the yen is very cheap. So anybody like pound or even the dollars and everything like that, especially the US dollar, like out here, we like to invest in the yen a lot because they are really good for saving money and the yen is really cheap. So it's kind of like we're getting more for our money. So what they do, the Asian market, Hong Kong, they like to consolidate their orders for that reason, because once they consolidate that orders, it's kind of like compressing, like when you have a bunch of clothes, like the more you fold compressing them, the more you can get in there. So the more that the Asian market compress, the bigger the reaction is once we leave Tokyo. So if you look at it, after we leave Tokyo, it's always a big reaction. After we leave Tokyo, it's always a big reaction because we're coming after those compressed orders that's happening, because they have to make sure they get so many all in just, that time frame from 22 to, well, technically 00 to 06. So they have to make sure they get that much within that small amount of time. Now, whenever you see Tokyo trending from a premium, what's happening is because whenever the market loses its value, a lot of the times, once, I hate to put it this way, but the market is like the biggest user and manipulator, because once the market already came for what we got at the premium or discounts, everybody's leaving the yen. Everybody's dumping their yen orders. So therefore, when everybody's dumping their yen orders, what is the yen going to do? The yen's going to continue to fall, which is why JPY it always buys, because the yen is always so it's just weak. So now, once we already got everything at that premium rate or the discounted rate, now we're going to always have to just come back and just dump the yen. And then after that, that's why London will continue to pull back into like the lows of Tokyo, and then, or even like the mids of Tokyo, and then dump off again. The reason behind that is because, like I said, the pound, they can take whatever they could from the yen or even the US dollar, and they'll just go ahead and just go along with the move. After they go along with the move, New York most of the time will probably be the reversal point. So let me see, like right here, 1900, the reversal point. So as you can see, because 1600, that's when London closes their banks. So at 1600, that's when you can kind of see, like, they still had a great sale, but not that great, honestly. It's probably like 30 pips. Yeah, 30 pips. So now, as you can see, at 1900 at night, if I'm trying to hold it longer and expect the 1900 to melt again, if I don't see no instinct at 1900 on the dot, I'm closing my trade. And as you can see right here, that's where we start to go ahead and make a reversal. Now, if you look at this, Tokyo is trying to set the high and the low, which it did. Tokyo set the the low right here and the high right here. If you look, Frankfurt opening came to 50% of Tokyo. Why did it come a lot higher this time? Is because it actually gave it enough time to actually compress it a lot more than compared to it just trending. When it's just trending, it's kind of like a snowball effect. It's going to be kind of hard to gain control. But when it made that high and that low, you have more than enough room to actually go ahead and get a little bit more money, basically, in that term, and then continue to make your way down. And that's the truth. That's the truth for that one. Do you guys have any questions on that one? Okay. Let me see. Sean, he said, can you go back over what's the purpose of the 12-hour? Yeah, so the 12-hour, because if you think about it, the 12-hour is, let me remove drawings, let me remove indicators, and let me take this off. There we go. If you use the 12-hour, 12 hours is in combined of 24 hours. So the most important moves that we're going to receive on the 12-hour will be 2200, which is the Sydney opening, R to B10. Now the 10 candle, the 10 o'clock candle can look like this. But really your entry may have been at 9:30 right here. So that's why the 12-hour is specifically broken down like this, because if you look 10 o'clock, watch this. Let me go to bar replay. 10 o'clock. Now let's go to the 15 minutes. So this is 9:45, not too shy off from 9:30. And then this is exactly what's 10. Also, this is another thing. This is why I have a specific Zoom left, because even though a lot of people will get confused over all of this mess right here, and really it's just only one thing you need to look for at this area, or why you won't get confused or anything like that. So then after that, boom, we make another way up. If you look right here, we can clearly see, like I said, as you guys go on the Zoom, you guys gonna be like, damn, what the hell? If we can clearly see that this higher low was not by no POI. It was not by POI. It was a false POI. Oh, wait a minute. We have a POI right here though. Let's see. This is 10:15. 10:15. We have a POI right here. Let's see how this plays out. That was 10:30. That was 10:45. We're still by this POI. Let's see how 11:30 reacts. Oh, 11 was perfect. 11:30 reacts. So as you can see, we spike it out. So now we're waiting for 11:30 to actually, she didn't close above there just yet. Yeah, she didn't close above there just yet, but we're still gonna wait for it to play out. There we go. So now as you can see, and it comes right back to another POI. So now as you can see, sometimes it's kind of like a waiting game, but it's not really risky, because as of right here, where was it at? 11:30. Because if you're looking at 11:30 on the smaller time frame, let's just say the 5-minute, 11:30 didn't even give you an instant melt. So that right there is just like, okay, let's just continue to wait until our next golden time. It always ends up like that. That's why sometimes, like, even in, what time was this? Let's see. Oh, this is 13:30. You see? So 13:30 right here. So sometimes, like, even like when I go back in my trading history, like I'll be like, damn, it's so many trades that I close, like whether it'll be like I'll open like a 10 lot and like I close on like $50, or like I close on like negative 100. Like it's a lot of closes, and that's because I'm saving myself to identify that the time should have actually left the POI in the market when it was supposed to. So that's why the last Zoom on exit points will be your lifesaver, because I guarantee after that, you guys won't take any L's, honestly. And that's why some people be like, bro, how do you not take L's? It's not because you're actually knowing what goes on, and you're putting the times with it, and you're putting volume with it. So it's kind of like, in reality, like, how would you be able to take an L when you know that? Like it's hard to at that point. When we trade, it will be like, when it's trending, it will be like a 38.2. Hell no, it won't even be like a 38.2. It'll literally be like the discount or the premium. Actually, like watch this. Like, let's just say this is Tokyo right here, and this is trending. If this is Tokyo and this is trending, it'd literally be like, it'll go test the discount area again and then just fall back. So not even a 32. It'll be like a, what's that one that they always use, like 23 or something like that. I forgot what it was. Yeah, like 23 or something like that. Do you guys have any questions about this one?
Yeah. Hey. By trading at a premium, do you mean like a lower price than it should be trading at?
Trading at premium will be at a higher price. So
Okay.
let me see. So like, let's just say that you have, okay, I'm gonna just actually use this as an example. So right here, this very first line will be your premium. And then this right here will be your discount. 50% is like more just like of a neutral foundation. I don't ever take sales off of 50% of Tokyo unless Tokyo is trending. That's the only time. But if you look right here, as we can see, this one's actually really perfect. And especially if you're going on the 5 minute or even the 1 minute, like you don't really necessarily need the 15-second. Honestly, I'm gonna be honest with you guys. I haven't used the 15-second like a month. I think like a month. But I've been favoring the 5 and the 15-minute a lot. If you really look at this 06, we ended right here, but we failed to, take out the Tokyo low. So this is when Tokyo ended. So if you look, think of it like this. It's a few ways to actually go about this. Since you said premium and discount, I don't remember if you was in, I don't think you was in the actual mentorship, but that's one thing that I still keep with me. And then just the session time, that's about it. So then, like, for instance, like right here, once Tokyo ended, we have more than a few taps. The more taps, the better. The more taps you get into a POI area, the furthest it will go. It will go super far. So then after that, it's two ways to go about this. You had your, I guess you could call this a higher low. You had your higher low that we came and grabbed orders underneath. So that's one confluence. You had a double flat bottom, multiple taps into the zone, which is another confluence for the ones in mentorship. And yeah, that's actually about it. But my favorite confluence would be 745. So right here. So yeah, we've seen a lot of exhaustion, honestly. So my entry probably would have been right back at this double flat bottom, which probably been like 745. Yeah, 745. And then as you can see, let's dial in to when London actually occurred. So remember I said, Tokyo. Let me remove the drawings and let me remove the indicator. So if you look at this right here, 08. 08 was the start of London. If you look at 08, you can clearly see how that 15-minute candle came to basically like stop it out in a way. And then 11:30, I mean, not 11:30, 8:30 comes and wipes it all out. Is because my first thing, anytime a session opens up, so if it's 8 o'clock, I want to see how that next 15-minute candle happens. If we pierce the lows of it and then we start closing above it, more than likely that's telling me that it's going to go ahead and go higher. Let me see, where is this 1330 is known for doing it. That's 1315. That's 1330. So yeah, even entries like this, because I know sometimes people always wait, okay, it didn't give me a pullback, it didn't give me an entry. The market is always going to give you an entry, no matter what day it is. It's always going to give you an entry. And this is why the methane candle video is going to be so important to you guys, because it will always give you an entry. If people say the market don't give you entry, they're lying. They're lying. They don't know how to catch it. I can literally trade every day, every session. It's always going to give me an entry. Do you guys have any questions? No questions?
Actually, Deshay, can you go over what a trending Tokyo looks like? Because I know Tokyo is supposed to be
Yeah.
like relatively like consolidating compared to like London and New York. So what do you mean by trending Tokyo?
Do you want me to draw it out for you, or do you want me to find it on the charts for you?
Just a quick look on the charts.
Okay.
And then
All right,
compare that
so-
to like a regular Tokyo consolidation.
Yeah, I got you. So let's see. Let me find a good one. Okay, this is I need a better one. Okay, this is perfect right here. I think I already went over this one actually. So as you can see, when I say premium, as you can see, this is like the highest price range right here. Like price is having a hard time trying to break this. So whenever you have price having a hard time trying to break, kind of like a burst after distribution almost in a way. Once you have like the market having a hard time trying to, break the highs, what's going to happen is Tokyo is going to go ahead and trend. Now, when Tokyo trends from a premium or when it trends from a discount, as you can see right here, well, this one says high and is low, so this one didn't really trend. But as you can see right here, whenever it trends from the premium or the discount, London will continue to drop it. it will always continue to drop. So that's why, like, sometimes, like, whenever I'm in a trade and Tokyo's continue to drop, I'll just continue to hope for the most part, because sometimes it actually could come to like the 50% of Tokyo and then drop down, but majority of the time it'll only like just test that the bottom range of Tokyo in a way, basically. You get me?
Yeah, I got it. Thank you.
Yeah. Somebody said 6 hour. Why do you use the 6? Honestly, the 6 hour is 6 hours only for me for 1600. It just lets me know what 1600 is going to end up doing. I don't look at the 6 hour. I had the 6 hour on my chart because, dang, I don't even remember the last time I even been on the laptop on TradingView. I think I was going over with somebody on the 6 hour. But yeah, basically the 6 hour just let you know what 1600 is going to do. That's it. Like it's in 04, because sometimes 04 in Tokyo will give you a good entry, but I don't use it, honestly. Like I said, I don't go past the 15-minute. The only time I'll look at the 12 hour is before London on Tuesdays and before London on Thursdays. That's the only time I'll look at it, and it's going to give me a direction to what's going to really happen. That's the only time. Let's see. And when you say 11:30 or 9:30, are you entering or paying more attention to price at those times? I'm so happy you answered that. At 11:30 are the times that I've given you guys. You do not enter at those times. Sometimes it will happen like that though, but that's the time you should be looking to enter. Because if you're entering at 12:30, sometimes the actual move can actually happen at 12. Just at 11:30, you need to just be on the lookout. Because anything can happen to where the move is right there. You can catch it. So that's just the time, because let's just say that Tokyo ends and then Frankfurt is instantly dropping. Actually, you know what? I'm gonna actually go over US 30 trade that I did yesterday. Was it yesterday? Yeah, yesterday. So let me see what it looks a little different from my MT4. Oh no, that's not why. That's not why. There we go. Let me see. When was it? There we go. Right here. So for US 30 right here, this one we was at a premium area. Now, as you can see, Tokyo kind of trended. How can you tell when Tokyo actually fully trends? Easy. Look and just look and see where Tokyo was headed more towards. Did it try to go up or did it try to go down? Unless it just literally has a trend to where it just looks like something like this. But if it still looks like it's trending, but you're quite unsure, just ask yourself, where is it mostly going? To the downside or to the upside? So now once Tokyo has that high and that low, as we can see, I end up shorting from this area, because if you can look, 11:30 on the dot came right here. This area was a false lower high because it was not no POI that it rode off of. It just made a random lower high. Now at 11:30, that's when we went to go ahead and stop out that false lower high. And then we actually bought it into a good POI, clearing out this area right here. 11:30 was the actual move. So what I did, I actually took my trade from 11:30 all the way to this daily opening right here. So just right there. I didn't really want that many pips, honestly. Like I know a lot of times I can hold more, but sometimes I just really don't, honestly, because it's like, I'm impatient sometimes. But like, even for this right here, as you can see, Tokyo took out the highs. So now, because it's Thursday, we're heading for a heavy reversal. What happens? Boom, we go ahead and take out the lows of Tokyo now, as you can see, to the T. Boom. So now we're probably going to go ahead and, cash out and hit this daily opening. Same thing as we did right here, hit that daily opening. Same thing.
Good to say.
Mhm.
I just have a question about that particular trade. Where did you put your stop loss on that one?
For which one?
The US 30 trade you were just saying?
The buy?
No, the sell.
Oh, for right here? Let me see.
Yeah.
I was on because the pricing is different from FXCM. I think it's off by like maybe 50 pips or something like that. I think I was on the 5 minutes. Let me see. Was I on the 1 minute? I think I was on the 1 minute actually. Let me see. Where did I have my stop loss at? Oh yeah. Okay. So technically by my MT5, my stop loss was actually like right here. But on my MT5, it was like right here. But really, like when it comes to that, whenever I see like my time being sold, so like I'm gonna put it this way, watch this. So like let's just say that right here we have 11:30. Where's 11:30 at? Where's it at? There we go. So let's just stay right here at 11:30. Once that 11:30 candle happens and we not instantly start seeing some action, what I can do is I can put my stop loss like a few pips above it, honestly, because I'm not looking for it to spike out, because once I see that my golden time has just instantly like start leaving the market, I can just go ahead and put it above just a little bit. Because if the market comes back, then I got stopped out like maybe like 2 pips or like 10 points or 20 points, because if I get stopped out and I put it a few pips above where the price should be, like the magic time should be happening, it's gonna flip on me. So it's no point of having your stop loss up here or up here. I'd rather get stopped out 2 pips instead of having my stop loss right here, and I know for sure it's gonna keep going up, you know. And after that, you see, and the reason why this higher low right here, because like I said, it's no POI. Methane candle. A little tip from a little inside thing from that you're gonna get from the actual methane candle video. The smaller the candle, the smaller the order. The smaller the order, the smaller the push. Which is why we took out this fake higher low. And then we just continue to, continue to go down. So like I said, when it comes on February 1st, y'all gonna really be killing everything in the game. Can you go over how true highs are being low? Yeah, so that's it. Okay, so what I want you to do is go and look at the weeks, because the weeks will tell you when I'm going to go over that. That's not on this topic right now. But does anybody else have any questions about the topics? You guys all good? Under what condition do you target the daily opener or close? Ooh, I always target the daily opening. Like I said, this is the daily opening Zoom, but just like clarify it real quick because it still has to do with ranges. If it's a huge big range, I won't target the daily opening. I'll probably just target like the discount of that range. But if it's not a huge range, then I'll target the daily opening. Sydney and daily opening is 2200. Yes, exactly.
When you mark the daily opening, like manually, are you going on the 15-minute or what time frame are you marking it with?
You can just do it on the 15-minute. The very first candle that happens at 22, like literally like the first move that it makes, that's going to be the opening.
Oh, okay, gotcha.
Yeah, so right on 2200. Is the most recent daily opening, or how do you determine it? Yeah, so right on 2200, that's the daily opening. Did you catch the US30 buy the same day? I thought I saw you post on IG, just curious. I saw it or that. Yeah, I ended up catching the US30 buy, honestly. For US30s, it's kind of hard for me to go over US30 trades on TradingView because my MT5, like, it'll say I entered right here, but FXCM has an entry right here. So it's just, whenever it comes to CFDs, they just always have a different pricing, honestly. That's why for like charting with the shade, like I can never do US30 because everybody's price is different. But I can do gold and euro because everybody's price is the same. But when it comes to like CFDs, everybody's price is different. How do you know which one is the right one? I don't get it. As far as price, I don't get it. Just go on TradingView and just match just match the one that's close to your broker. Honestly, that's all it is. That's all it is. But type of one, if you guys got everything, does the Go honestly matches with all brokers, honestly. So I still use FXCM for Go. But type of one, if everything was helpful for you. Type of two, if you guys are still like kind of like confused on it. Still new. So many questions. Sorry. No, that's why you're here. Okay. So yeah, so this is gonna be for the week. So the most recent, the dailies is gonna be for the daily Zoom. The daily's gonna be for the Damn, Alex already jumping again talking about what's the homework. Let me. I think I have it as the tab for you guys. Hold on, let me check to make sure real quick. The recording's not gonna be up today. I'm gonna have my boy encrypt these videos first, and then it's probably gonna be uploaded on something else. So study week 1, you guys should be able to type in there. The study week 1, I want you guys to give me I want you guys to draw out Tokyo for me, and I want you guys to like give me the I need to see the time. I don't care if it's a dot or you typing it. I want to see the time that you guys would have entered. I want you to like a back test, and I want you to go over it, and I want you to upload it on there, whether you failed it or you didn't fail it. I want to see how everybody's catching on to this one. You explain everything, Tokyo, put everything together in Zoom. Nah, this is literally just the beginning of it. Like it gets even crazier. Like for it to be 4 Zooms, it gets even crazier. Yeah, draw Tokyo range. Yeah, exactly. And then give me your times outside of those ranges. And then give me like a before and after. Any chart, yeah, it can be on any forex pair you wanted to. Yeah, any forex pair. But other than that, though, I'm gonna go ahead and end the Zoom. I hope you guys enjoyed this one. Like I said, this one, like the basic one, it's gonna get even better. Next Saturday, 1600, the same time, same exact time. But I'm out of here though. I do appreciate you guys.
Thanks to Shay.
No
Have a
problem.
good one.